Hello guys, good morning from this side. Today I'm going to explain answer a question I saw right here on my YouTube page, and it's regarding the algorithm zero range. And this will be the last time I'm going to explain the algorithm zero range for you probably. It's based on the confirmation. I think I saw the same thing on my Facebook page, where you have to confirm your algorithm range if the price has to reverse to the opposite side of liquidity after taking liquidity from a previous month highs or low. So I'm going to explain that to you guys. But the important thing is this right here. The first time I released the video, I told you guys to come back to this same page and tell me if price on S&P 500 actually followed my bias. None of you came back to say yes that I predicted S&P 500 correctly. Anyways, you have seen that I've already predicted gold, and gold played out. We know about BNB USDT. I talked about BNB USD and also S&P 500. But the important one, I say you guys should come back in the future to tell me if it played out is S&P 500. All right, so nobody did that. So before I continue, I would like to let you guys know about this right here. And I coming out from an award, and we have the best forex strategies analyst, and sorry, yeah. So here I am. Uh, you get to find me on the best innovative trading strategy right here. So during the voting on July 24, I'd like you guys to vote for me also, and also right here, best forest strategy analyst. And here I am again. So I'm nominated for 2 awards, which is best forest strategist analyst and best innovative trading strategy award. So thank you guys. So back to YouTube, while I was talking about our grinding range, and tell you guys to come back and tell me if price differ my direction. So yeah, I'll show you guys right now. And this is S&P 500, a very clean price delivery action right there. And you see the price actually went for the highs I told you guys about, which is this high, and the next draw liquidity is this high, and the long term draw liquidity is this high right here. All right, and remember when I was doing analysis, that was 3 months ago. If we go back to the YouTube, okay, 4 months ago, you can see where I was analyzing it right here on the weekly time frame, and I told you guys about it going bullish and withdraw to this liquidity right here, and the next one will be there. So if I continue like this, you actually see right here, okay, draw liquidity and my long-term draw liquidity right there. And yeah, on the weekly time frame right there. So you see we already drawn to this high, we're already taking this high, and we are close this high, and the next target will be this high. So how did I get to do that? Remember, the first thing I always tell you guys about my mentee on the mentorship and everywhere, but on YouTube and on Facebook, I tell you guys, once you open your chart like this and you want to start your analysis, the first thing you should do is to know your directional bias. You should know the trend. Is the market bullish or bearish, or is it consolidating? What kind of structure are you seeing on your higher time frame? And you can actually know that all of this right here, this is not a structure formed. This is a choppy market, so you're not to identify this stuff like this as a structure. Okay, so what did I do? All right, so I say the first thing you should do is to go out to your higher time frame. You have your monthly time frame, your NT5, even on trading view. So the best thing, the fun thing is that we also had 3 months and 6 months and 12 months, but that's by the way. So we always pay attention to the monthly time frame. Excuse me. All right, so let's start now. All right, just checking my record there. So you can see right here on the monthly time frame, we can actually see S&P is on a bullish structure, and if we get to start marking out our swing highs and lows, the major highs and lows. Remember when I talk about market structure, I talk about the external highs and lows. That's the point you'll be looking at for your swing highs and lows. So we have our external high, and the market really lower. You've been overall bullish from this point, and it's been bullish. You can actually see that. So we have our swing high. S&P 500 traded lower to take out sell liquidity from here. So we have that hunt right there, and it just need to grab liquidity, and then it rallied higher. So when it rallied higher, we see it traded and gave us a new high. And when I zoom this high right here, you can actually see that we are left with almost a relative high right here. So that is saying that price will be drawn to that high in future. And like I always tell you guys, both on the mentorship and Facebook, I say that timing is everything in the charts, because the market deals with time and price. So you must have a directional bias that the price needs to go bullish, but then stuff like this happened and finally go your direction. So I mostly use this on the stock market. I also teach about stock market. I give list of shares to buy, stocks to invest on. Remember, I told you guys about Tesla, and I told you guys about where I'll be buying Tesla. So if you go back to that video, you can actually see that Tesla actually followed my bias, and the video was released on, that was actually one of the first videos I released for you guys when I started YouTube. And you can actually go back to that, and you'll see that Tesla actually is buying the way that I expected it to buy right here, and right here. That was 11 months ago, and I gave you guys an area of demand that Tesla has to buy from. Sorry about this. If you go to Tesla, you can see that it took liquidity from the demand I wanted to buy from, and it starts to buy. Right, it starts to buy. So excuse me. Okay, I'm back. So this is Tesla, and that was what I mean by time and price. So actually, if you could remember, I talked about Tesla buying at this point. So it just spiked it just took liquidity, and then we see that rally. And I told you guys on Facebook, for my Facebook followers, I told you guys purchase Tesla. And I don't know if any of you did that, but then you can actually see Tesla right there. And we have the Apple stocks and stuff like that. So that's by the way. That's by the way. Let's go back to S&P 500. And remember, I said I'm going to answer that question based on using algorithm range as a confirmation entry and stuff like that. So we have S&P 500, and we have this high, we have this low, we have this high, and we have this low. And the interesting part about that low was that it did a liquidity grab right here. Actually see that on the monthly time frame, and put upwards. Okay, and the next thing I noticed was that since the market is overall bullish, and you should know that the algorithm D range always, all the time, goes in line with the overall trend. So if the market is bullish and the algorithm range starts printing, most of the times, always the time, it follows the overall bias of the market, overall trend of your market, and pay attention to your higher time frame. That is the monthly time frame, and you can actually see that highs and lows. And you should know that all of these right here, these are just liquidity, and there's no real supply found right there or any other block found right there, because actually see that there's no imbalances, but price has been clearly imbalanced since all this while and range for some time. So any other thing you're seeing right here, like the supply or stuff like that, they are not valid. They are not valid supply. So this is just the market trading one-sided for the purpose of it to create a new higher low. All right. So the hunt occurred, and also it did occur on the previous month, and then right higher. So we can actually see and notice that every set stop was protected. Now you just don't see any candlestick and say you're looking for a golden range, like stuff like this. This is not a D range. Like this market, the candlestick trading higher. You must make sure that your monthly candles, they are all like in parallel. Is it parallel or series to each other? All right, like you actually know and see that they are in a certain price level of support and resistance. All right, so you will have in your daily range, they are in a certain, they are in line. All right, so not something like the candlestick was looking like this, and no, you're not to look for your golden range like that. So the golden range is printed right here. You can see this candlestick was ranging, and you can actually see right here, this is resistance, this is support, and also this right here, we have an golden range right here. It is a range market. You actually see the area of relative highs, area of supports, the market range for some time right here, and then this right here is not considered as a golden range. This is a single candle. So you are observing the candles on your monthly time frame. If they are ranging and you know that you have to apply your golden range, you watch out the first side of liquidity that is to be taken out first, or if it is not taken out, and make sure you're following your overall directional bias. Right here, S&P 500, you know the market is bullish. Okay, so right here we have the month of February, and you can actually see the month of March traded. You can see actually 4 months ago I'll release this video, and you can actually see it traded lower and didn't go below this low, right? And even this low didn't go below this low, and this low didn't go below this low, and the origin started from here, like the origin of that shift to confirm to us that we are having a new swing low. So we are going to be pointing upwards. It started from here, and every sell side liquidity has been protected, right? So we traded higher. We did a stop hunt on previous month. Now this is where I'll answer your question. We are looking for confirmations to execute a buy and stuff like that. So for you to confirm if the market has to shift direction, I posted the last video. You should pay attention to your 4-hour structure. All right, so this is a previous month, and your 4-hour, you have this high. So let me mark that. You have this higher high, and you have this higher low, and let's just say that we actually did a stop hunt. Remember, you only confirm a stop hunt after a structural break. Okay, just see a candle and say it's a stop hunt. You must have a structural break before you confirm a stop hunt. So we have normally based on we're looking at a lower time frame, you might be seeing a supply right here. So what the market will have to do during the first week of the month or the last week of the month, you know, it is the first week of the month and the last week of the month, you always get to see the market, the algorithm printing a new high and a new low. So the algorithm might trade into the area of supply, and it starts to sell. Now while selling, it might give you a failed low and violates your POI, violate the supply. So right now we are saying, okay, fine, we are now having a confirmation. So the major swing high on the 4 hours will be broken, and we have that impulsive rally that traded higher, leaving behind imbalances, fair value gap, and other block. Surprise, we have to, you know, trade backwards with liquidity. Make sure you conduct your liquidity assessment, tap the other block, and ride higher. Most of the times it happens to be there is a fair value gap. So the last video I uploaded based on Fibonacci. So use a Fibonacci to measure it, and you measure looking at the 50% level and the 61.8 level. And if it has to go deeper, it has to be 78 or 79 Fibonacci level. So now there's what you have to pay attention at. So now this is S&P 500, the area where I was posted for you guys. So we called that the previous month low right here. So that was what we hunted, and we now have previous month high right here. So we mark that, and we know it's the previous month high. Please note, again I repeat, follow your higher time frame directional bias, which is overall bullish. So yeah, now after you mark your structures, you have to go down to your lower time frame to look for your confirmation entry, and we're on the weekly time frame. Now weekly time frame gave us something very clean and neat. You know, when I posted the analysis, it was right here. I took the entry, receipt buy, trade backwards. Like I said, time is everything. Most people will be like, oh, the market is selling, it's going against you. No, you just timing. Market has to expand and retrace. Okay, so it bought, came back to the other block here again, and it rallied higher. It took out the liquidity, right? The next draw is this high, the next draw is this high. So on the weekly time frame, you actually see something wonderful that happened. After the liquidity grab, another block was violated right here, right? Other block, the last big body candle responsible for the impulsive move that breaks structure. That's what you've been told. And price tap it, violate, and right there, it traded lower again, gave us a fair low. And what it traded into was this opposing other block. So this other block was responsible for the price to be violated. And the interesting part was that it gave us equal highs right here. So yeah, the other block is to be taken right there to, be drawn to liquidity. Usually liquidity assessment of equal highs draw to liquidity. So now you already see that. Remember, this is the previous month low we are looking at. So daily time frame. On the daily time frame, you can actually see how clean it is right here. You have your other block right there on the daily time frame. So this month was June, and this is October. This is June, and this is October, and right here we have September right here. So October took out September low, so that was a hunt to previous month low, right? So remember, we had to mark this the previous month low, and you can see it traded higher to give us what? A confirmation entry. This is what I was talking about. We have that break, structural break, right? So you can see this high traded and came back to the other block before the expansion that gave us confirmation that yes, the market wants to shift after taking previous month low, right? So it traced backwards to what? The other block that we have right here, the area of demand, and we rallied again. When it rallied, what confirmation did it give you? It gave you a break structure, right? So if we have to use our Fibonacci, let's use our Fibonacci to mark this. We have this low and we have this high. You can see it traded backwards to 78 Fib level. And make sure when you're using your Fibonacci, you make sure that it is in line with your setup, which is fair value gaps and other blocks. Okay, the price, the other blocks, the Fibonacci level is always at that line. All right, so also have this high, this low, and we have this break of structure. And make sure you're using your Fibonacci after a structural break. Okay, you use Fibonacci to confirm a trend. So that low, and we have this high. There was this the major high, the swing high that was printed before market starts to retrace backwards. So you can see where it retraced backwards to 78 Fib level, and your other block is in line to that, right? So we have relative highs, which is draw liquidity, price rallied upwards, and take that liquidity and give us a new previous month high, right? And so it retraced backwards using the Fibonacci again. Your low and your high, price trade backwards to where? 58 Fib level, and the Fib level is in line with what? Your daily time frame order block, and that happened after price to liquidity on previous month low, right? So let's go to 4 hour time frame, and I will show you that because that was where we are focusing on, the previous month low. Okay, now this is our previous month low, so let's mark it right here. Let me see, this is March, and okay, this is our previous month low. February, this is February, trade lower into the other block. Okay, so previous month low right here. So on the 4 hour time frame, the major high that we have, most of you guys, we've seen this, the breaker structure. So the major high that we have is right here. Okay, this high, and the major low that we are having is this low. So normally on the 4 hour, because you didn't start your analysis from your higher time frame to see your directional bias, you're looking at this other block to sell from, which is a good idea because normally I2 will fall for that. So price trading to the other block, sold for a while and rejects. So we are now having a failed low right here. There's a failed low right here, right? And that's the violation of the other block. So we have a structural break, and then we have relative highs liquidity. That's a draw liquidity. So let's go to the 2 hour, and I always say that the least time frame to look for that structure is your 1 hour time frame. Okay, so when you can actually see that when price tapped the other block from the daily time frame right here, hunt, you trace backwards. So the important thing we are looking for is a confirmation entry, right? So now on the 1 hour, the 2 hour time frame, you can actually see that this high was broken. Normally when you're doing analysis, you will say you're having a fake out zone right here. So price should grab that liquidity and tap the other block and then sell. So normally that's what I will do also. So price tap into the other block, sell for Y and reject. Now when price tap the higher time frame area of demand, you can actually see when you tap, we have a confirmation right here, change of character, and a structural break right here. Because normally if you're on the lower time frame, you're seeing this as an area of supply to sell from, and you say this is a break of structure, or this is not clean. All right, don't do that. So price trade into the other block responsible for that, but we will not advise to trade this. All right, we only trade when the other block that was supposed to, like, violation of other block, right? And that was what happened right here. So what was responsible for that is what, this area of demand right here. And what you did first was also a stop hunt and in change of character right here, and then it violates the supply zone, which have a high, so we have a breakthrough structure right here. And now we're conducting liquidity assessment, and we have right here, we have inducements right here, and we have buy stars on this high. So price tap the other block and ride it higher, right? So even if you're to use your fib level, you mark that, you can actually see right there where the price traded into. So let me take this off, and right here, so we can see it traded into the other block close to 78 fib level, and it rallied higher, and that was how it continued to ride it higher. So if I actually get this opportunity to trade that, and what else swing trading, I would have made something from that, right? And swing trading, you can still use the Fibonacci to, you know, mark out your structures, because right here we can see we have a clean structural break right here. Okay, this right here not considered as a structural break. This is where we have a structural break, and you can see previous move high was taken, right? Now when a previous move high was taken, do you see any structural break to say it wants to go bearish? No, there's no structural break to the downside. Okay, so it's still bullish because the overall trend is bullish. So it didn't break structure to shift to the bearish market, it just keep going higher. So normally you still use your Fibonacci level. You mark this high and this down low and this high. You can actually see where it's been consolidating still on the 618 fib level right there before I ride it higher. And by the way, that is been then there is inside a fair value gap right there. And normally if I move to the higher time frame, you will see that this wholesale candle right here is actually another block. So like if we go to 4 hour time frame, you actually see that, right? So price tap into it and it rises higher, and then I think I would not like to call this a structural break, but most of you say that it's a structural break. So use the Fibonacci right there. You can see price traded into a 50% level, which has a fair value gap, and we now see that expansion higher. So looking at this, who knows, like we have a structural break right now, we have a break of structure here right now. So maybe the price, you can see the other block is in line with the 78 Fibonacci level. So probably it may want to trade lower. You know, we have news, high impact news coming, and okay. Oh, all right. So it continued going higher, then it come back, and that is fine. That's fine. So this is where we are currently. So yeah, we know where we have been drawn to because we can actually see what it's doing right here. So we have news impact coming up, and so let's get to Euro USD. And I want you guys to pay attention to me. And what I want to say is that always make sure you're using this. Like just stick with 1 or 2 pair. You can stick with Euro USD and GBP USD, the 2 major currency pairs, and maybe you can add gold to it. All right. So just be consistent with them. All right. So let's focus on gold. On Euro USD right now. So we move to our monthly time frame. What I'm seeing on Euro USD is probably a bullish market, right? All right, so let's focus on Euro USD. I told you guys the same month to buy Euro USD, and we can actually see it right here. So let's start our analysis right now. You remember I showed you guys Fibonacci level based on right here where we have a failed high right here. So we have liquidity resting on this high on Euro USD, but the month of June opened and it didn't even go higher, right? It just sold lower. Sorry, it opened for this point, didn't go lower, it went higher and closed, and now we are right here. Okay, so let's focus on this month right here. So we have the month of June, and we'll bet that has a previous month low. Okay, so we have previous month low, and right here we have previous month high, which has liquidity and those relative highs right there. All right, so we focus on this candle. So let's quickly run down to the weekly time frame. So these are previous month low and these are previous month high, and you can actually see that this right here is an order block. So price traded into the order block right there on previous month low. So you can actually get to see a confirmation right there. So if you go down to the daily time frame, you will see it. But then let's go to our 4-hour time frame. All right. So this is our 4-hour time frame, and remember I said you should look for your structures on the 4-hour time frame, and the external high is this high, and we have this low printed for us right here. So that is the structure we were expecting to see it violate, and normally you always get to see your order block right there. All right, so this is our previous month low, which is in the month of May. Right here we mark May right here. So the market opened on June, right, which is the first week of on June, right, and it violates the short-term high of May, so giving us a structural break. So price trade into the area of demand, but that is not a confirmation yet, even though we have some little consolidation right there, and before we finally see it rally upwards. So normally let me go to the 2-hour time frame. Right here we actually see right here we have this low, we have the swing high, we have the other block, we have the swing low. So for the violation occurred, we have change of character before the break of structure. Price trading to the other block on June, range, but then it gave us a confirmation entry right here. The first thing it did was a stop hunt, and it traded higher. It took liquidity from this high, because most traders will still look at this to sell, but it violated them. So price trade backwards into the area of demand, or responsible for that to rally higher, right? So that is where you can get your confirmation entry. Even if you roll down to the 1-hour time frame, you can actually see it right here. You have your 1-hour time frame. So after the structural break occurred, you can actually use your Fibonacci, because you have an expansion. So you have to mark for your recent low, and we have this high Fibonacci, and price trade into the 78% level, and it's been ranging right there, even went deeper before we finally have the rally upwards. And when the violation of supply occur right here, we first have change of character before the break of structure. So we use our Fibonacci high and that low, and from this high you can see price trading to 78%, 61.8% level, and we continue to go higher, right? So we use our Fibonacci, we have a break of structure right here, and we mark this high. Price trade into 50% level, and then slightly higher we have break of structure right here. We use the Fibonacci, the low and the high. Price traded into 0.618 price fib level. We have another break of structure right here. Remember, the market is trading one-sided, so we have fib mark here we have this high right here, price trading to 0.618 fib level. So we trade higher, we have a break of structure right here. So from that low to this high, from this low to this high, that is our swing high before price starts to retrace backwards, and we traded backwards to 78% fib level right there, and price has been consolidating right here because we are actually close to, you know, NFP and CPI. So this is the other block in which we traded into, and it traded into it twice. So it's kind of like creating liquidity right here, and we still haven't had a confirmation, like a structural break, to confirm if Euro USD still wants to go bullish, or it has to violate that low to go lower. All right, so we still have our previous month high right here, and remember, when this previous month high occurred, you can actually see that we shifted right here. We have a structural break right here. So I've explained this before using your Fibonacci to mark out this. So you have it straight to 50% level, and so lower we mark up again. You can mark this one, but it didn't come back to that. So we have this right here, 50% level, it traded back to that. We keep on doing that. We have this high, we have this low, not even close. We leave that alone. We have this high, trade backwards, and it ranged at 78 fib level before I traded lower, and then we start to see the choppy markets right here. Okay, so yeah, I hope that this helps you guys. So let's go to the last one, GBP USD. So for you to confirm after a previous low or high is taken out, you confirm with a structural break. Okay, we have GBP USD, and we go to our monthly time frame right here. I've already predicted GBP USD to go higher previously on my Facebook page, but that's by the way. So right here on GBP USD, you can actually see that ever since we had this stop loss right here, and this is the point where I told you guys to buy GBP USD on my Facebook page at the month of March. So we've been going higher since then, and I think I wanted to go higher to this equal highs that we're having. So ever since you trade that low and trade into fair value gap, you can see that all the sell side every sell stop has been protected right here. They were not hunted. So here we go down to the weekly time frame. I posted a video on weekly time frame on my Facebook page that when I wanted to sell from here, I was like, no, I am not supposed to sell because I can see that GBP USD is printing highs and lows, highs and lows. So we're expecting a new high, right? And we have right here, price trade backwards to the fair value gap and continue to go higher. If we use the Fibonacci, didn't even come back to 50% Fibonacci level. So okay, back to monthly time frame. I forgot something. So we're looking at June. Now this is our previous month's low, which is May. Alright, so we labeled that previous month low, so we could analyze that on our chart on the 4-hour time frame. So we labeled that as previous month low right there, and let's just quickly run down to the 4-hour time frame. Okay, alright, so these are previous month's low right here, and you can actually see the confirmation I was talking about. You can actually see it on your chart on the 4-hour time frame, previous month low, which is May, and we have June. Right now, mark out your major external swing highs and lows in your 4-hour. You have this high, and you have this low, and you have also this low right here. Right, so normally we'll be waiting for a structural break majorly on this high. Remember, I shared this setup with you guys on Facebook, and remember, I and my team, we execute a buy right here, and you can see where it is right now. Imagine this swing trading. Imagine the swing trading. Go to my Facebook page and scroll back to my post. You will see me post analysis on GBP USD buying this stuff right here. So the analysis I did was in the 1-hour time frame because I noticed previous month low was protected, and we saw a clean order block on the 1-hour time frame. So what we saw was that we saw a trend line liquidity, and on the 1 hour time frame we have the structural break. We have two structural break, right? We have the first one we had was a change of character right here before we have a break of structure, and then we have KML right here, and this other block sold over to take liquidity from these lows, right? So it's taking trend line liquidity. We also have the stop hunt right here, and we have a clean big body other block printed for us, which did the expansion, did a break change of character and the break of microstructure. So you use your Fibonacci, you can mark that highs and lows. That is straight to the 78 Fib level. So that is a confirmation entry, right? Before you ride it higher. So we had our entry right there, and price trade higher, taking out the major high right there. And most traders were looking at this as an area of supply. You can actually see that the area of supply was violated. And what violated the area of supply? We can actually see that it was an order block right here on the 2 hour that violated that. So it's like a second confirmation entry, right? So we have that break of structure on the month of June. June were the first week on Friday, the first week of the month. So that was the reason why we had a failed low on the monthly time frame. They didn't go lower to hunt previous month low. The reason is this: the structural shift. All right, that's your confirmation when you're dealing with the algorithmic D range. Make sure you mark out your 4 hour major highs and lows. You wait for it to break. Then you're confirming that after taking liquidity, it has to shift. Either you're having a shift in microstructure or you're having a stop hunt plus a break in microstructure. Without that, the market might likely to continue going lower. If this high was not broken, the market is likely to continue going lower. That is just it. That is just it. So the high of supply, the major high for was violated. So we are having the major change of character and the major break of structure from our 4 hour time frame. This is the external high, which happened in the month of June. So taking our short-term May high that was supposed to continue selling this market, they violated it. So price gave us a other block, change of character, break of market structure. We have the liquidity assessment, right, which is inducement right here. So that is other block. You already see your analysis, your smart money setup. You see your other block. You can also use a Fibonacci US 10, where the price trade into 78 price Fib level, which has the other block below. Price trade into it, and we ride it higher, right? We ride it higher. So after that, we have the break of structure. You can have your third entry right here. So right here we have Fibonacci level. It traded back to where? 68 Fib level, right? 61 Fib level. We extend again this high and this low. It traded to 6185 level, which trade into where? A fair value gap. So let's go to our 4 hour time frame. It will look cleaner right here in 4 hour time frame. This is our 4 hour time frame. Trade into a fair value gap right there, right? Then we mark again. We mark again. We have our Fib level. We have this high, and we have that low on this high. Price trading to 0.618 Fib level, and right here we have it pulling back, trading higher, right? And it happens to be there is a fair value gap on the daily time frame. So you can see the Fibonacci right there. If we use Fibonacci, this is our major swing low, and we have that swing high right there. Price trade into dip into 618 Fib level. So we are still going higher, and we have relative highs on that high. So that is very, very interesting. This is what you should know. Okay, with this you'll be a better analyst. I am a market analyst. I analyze the market for you guys, and I share it with you guys. I give you my setup, and it doesn't mean that I'm 100% right. Sometimes when I'm going through emotional damage, I won't likely get to analyze the market perfectly. And I do realize my mistakes. So nobody's perfect. All right. The key is to be consistent. Is be 99% correct or 80% correct or 90% correct. I have to study all the time. I have to backtest. I have to look at my chart all the time and discover new things. And that's what I'm sharing with you guys right now. All right. A teacher was once a student. A mentor was once a student. Okay. And when a student learns from his master, he can add some modification into it. All right. My favorite anime, Naruto. You know, for those that have watched it, we have Naruto learns from his father, Minato. the rent Rasinga, but then he modified Rasinga. What did he do to Rasinga? He added wind style, he added Rasen Shuriken, right? But then Naruto gave birth to his son, which is Boruto. So his son learned Rasengan, but he added his own modification. What did he add? He added a vanishing Rasengan, something Naruto cannot do, which is his master. So all this stuff is just modification I've given to you guys because I've backtest, I've spent time on the chat to discover new things, and you guys know that this algorithm range is ICT stuff. But I'm here to make it for you more easy and understandable so that you can easily understand it. Alright, I've shared it with you guys. You can actually backtest it. Just stick to 3 pairs, Euro, GBP, and gold. Alright, that's good. That is good to go. That is good to go. And yeah, and guys, don't forget about my nomination about the best forex strategy analyst. You can meet right here, and Stephen Obiji, and best innovative trading strategy award. I am here also. You can see I have other competitors right here. So during the voting on July 24, I would like you guys to please put hands together, vote for me so I could get this award and bring it home. Okay, so also my mentorship is available. You can chat me up on my Facebook page. You know my Facebook page, the Transfer Trader. You can actually click it right here to take you to my Facebook page. And yeah, that is where you get to contact me, and you message me, and my mentorship is there. And my mentorship, I don't do 1 month mentorship, 6 months, 3 months. No, that doesn't make sense. It doesn't work out like that. Because how a mentee, how a student learn in 1 month or 3 months or 6 months, it doesn't work like that. My mentorship is one-time offer, just once. You have a lifetime asset. That is it, and I'm uploading videos for you. If you need a session with me, I'm always available. We fix a day for that, and then you ask your questions during the session on your free time, and that's just it. I don't do 1 month, 3 months, 6 months. No, it will not help the students. It will never help them. They will still lack knowledge. So yeah, see you guys next time. And you know, I talk about stocks. I listed them on Facebook, though some I didn't list for you guys on Facebook because back then I was just on my own. I just opened my Facebook newly. The same day I opened the YouTube channel, I opened the page, and yeah, you can see some other peers, some trades, Odd Chef, S&D Chef, stuff like that. So swing trades, and the recent one I posted was yeah, UK 100. You can see that sweet price review right here. So I posted something about the XY. I need you guys to share your thoughts on that. I think the XY is to go higher because this is the analysis, just like I explained to you guys. We have the stop hunt, vehicle structure, trading to 3 hour fair value gap, and I was expecting to go higher. Okay, so this high, previous month high. Okay, so the reason why I wasn't interested was that, you know, we have the news coming up. So yeah, so see you guys next time. Till then, take care of yourself and be safe.